This trade worked because price did exactly what it often does. It ran previous day's low before reversing. My name is Vine. I document every trade I take and every back test I run as I work towards consistent profitability using market structure, supply demand, and price action analysis. In this video, I'll walk through a trade from my journal. First, we'll look at the higher time frame narrative, then the lower time frame entry model, and finally, the lesson this trade reinforced. Let's jump into the chart. So I've turned back the clock here to right before New York session, and we are bullish on the 15-minute. We have a swing low and have broken structure to the upside and created a swing high. Now, if you go to the daily time frame, we can see that we actually have previous day's low left unmitigated. We can target this as a pocket of liquidity, suggesting that if price liquidates this low, we could see higher prices. So that's the thesis, which works out nicely because on the 15-minute, we are bullish. So we're looking for longs. And so we just want to wait for this previous day low to be liquidated and see if our entry model can be confirmed. Let's advance price forward to see what action we see around previous day low. A little before 11 a.m., we see price mitigate that previous day low level we were targeting. This is our signal to drop down to the 1 minute. Here on the 1 minute, we can see the bearish action that created the liquidation of previous day low. Our supply zone actually starts all the way up here. And so price needs to show us that buyers are now in control to the point where they have to close above this level. We'll mark out the level that buyers need to overrun here with the orange line. Let's move time forward to see if we get that market structure shift. A little bit before 12:30, we get the break that we're looking for. Buyers have pushed price so that we can close above our supply level of interest. That's our signal to enter. The question is where? To answer that, we'll drop to the 5-minute to see what we can find. We have a couple of nice fair value gaps to target, but when it's such a big range of price, I like to go 1 frame higher to the 15-minute. Here we can see a nice fair value gap that we could target. We can place our stops right under the low and target this London high as a final take profit zone, resulting in a nice 3+ R trade. Let's play price out to see what happens. A little bit before New York session close, we get tagged in and our profit by 4 o'clock Eastern. At this point, I would move my stops to just under this low in case price dips down below once markets reopen. If it does, I don't want to be overexposed. This is a form of risk management that I'm backtesting that has worked out pretty well for me. Let's keep price moving to see what happens. And just like that, during the next day's New York session, we get the push up that hits our take profit. Now, of course, you can choose to take partial along the way, but the idea here is observing the value of seeing previous day low liquidated and what it can do to price. The key lesson for me for this trade is simple. Always pay attention to previous day highs and lows. They can often act as liquidity targets. And when that liquidity lines up with higher time frame market structure, that's where some of the cleanest setups appear. I'm not a guru. I'm just someone documenting the journey towards consistent profitability using market structure, supply demand, and price action analysis. If this breakdown helped you see the charts differently, then subscribe and let's keep sharpening our edge together. And if you want to see another trade breakdown, then check out this video here next, and I'll see you there.